Good evening, everyone. Hope you're all having a beautiful night. Today, I'm going to be talking about how I look at numbers and stats when I'm on my Robinhood app. So if you don't have Robinhood app, well, that's how I invest. Download that app and get your account started. And then so you can look at these stats numbers and start studying the stocks that you want to invest in. So today, we're going to be looking at the company that I've always liked. It's Bank of America. I am currently not invested in them at all. I will be in the future, and there's reasons why that I will explain later on in the video. So we're on the Bank of America, and we're looking that it's trading per share $26.68. And then today, it opened at $26.95, as you see on the stats. This is very important to study these numbers. So the open is what the company is worth per share when it opened today. Now you see the high, it says $27.01. Today is what the share was at its highest peak. And the low is what its lowest peak, which was $26.65. Today, though, remember that. The 52-week high is within 1 year. How high was the company? The company was $35.72. And then you see the 52-week low, which is what the company was at its lowest point, which was $17.95. And you're like, whoa, what the heck, man? Why did it even go so low that year, right? A lot of people were losing money because of the coronavirus. When the coronavirus hit, the whole stock market, everything went down because everyone pulled out their money. And that's why when you risk, when you invest in these companies, because that's the primary risk, is if it goes down, so does your money. So now we're going to look at volume. So volume is how many times it is being traded today. So it's been traded 46.40 million times today. The average volume is how much averagely what it trades per usually, which is usually 80.21 million times per day. So the market cap, now this is where things get complex. The market cap is, and please pay attention to this, the market cap is the market value of a company. So how much value a company is worth by calculating the number of shares the company has and multiply it by the price it sits at. And that's what the market cap is. So this company is pretty much worth, $233.40 billion, pretty much. So, Bank of America is right on that green, man. So the next one is the P/E ratio, right? This is where things get even more complicated, so please pay attention. So it stands for price to earnings ratio. This is the ratio for valuing a company. Now, it gets complicated, but usually if a P/E ratio is under 10, then the company is undervalued, meaning it is trading at a lower price than what it usually is. If a company has above 100, usually means it is overvalued, or 200, it's overvalued, usually trading at a higher price than what it's worth. But most importantly, the P/E ratio is not a definitive, meaning that this is just a prediction, okay? You should always do your own diligence and look into a company more than just the P/E ratio, because sometimes this can be falsified, and people will understand that because Robinhood puts out these numbers. You know what I mean? You should always have your own numbers, which is why I always calculate my own numbers when I'm valuing a company before I invest in them. Again, this is only a prediction, the P/E ratio is, and you should never go by that result. So the next one is the dividend yield. So this is the percentage of what they are giving out per year to the person that invests into their company of how many shares you have. So for example, if I had 100 shares, right, or I put $100,000 in, 2.61% of that $100,000 will go back to me within 1 year. So they pay you, just pay attention, they literally pay you for investing to their company. But you can't pull out your investment, that's the thing. Otherwise, you won't get the money that they'll pay you. So when do they pay you is probably one of the questions you're asking. Well, they pay you in usually quarters, right? So we're going to look at the quarters report. So quarter one, they'll pay you a dividend yield. Quarter two, they'll pay you a dividend yield. Quarter three, they'll pay you a dividend yield. And quarter four, they'll pay you a dividend yield. And that is because they don't usually pay it. Some companies do pay it by yearly, right? But most companies pay it by quarterly. Now, what is the earnings report? Well, this is what this is, as you see where it says earnings. So in Q4 earnings 2019, we had a good earnings report that they were making per share between 0.6 and 0.79. That's awesome. You know what I mean? You always want to be positive. You don't ever want to be in the negative in the earnings, because that's where things get complicated. But what the heck, man? It decreased to below 0.41, right? Why? Because the coronavirus hit. And it even went lower on quarter two, because the coronavirus is like, it's complicating all these stocks right now because no one wants to invest. But as you see, quarter three, which is looking good, has went up. And that's awesome. And I'm guessing quarter four will hopefully go up. Otherwise, if you see the quarter four earnings go down, you will see $26.69 that you see at the top of your screen go down, because investors like to see companies thrive. They don't want to see you going closer to the negatives, because that means the company's not making money to sustain their own company at times. So you always want to be careful when you're looking at, these earnings report and looking at that share price. So, but that's about it. Now we're going to go look at the graph. So when we're looking at the graph, this shows what the stock has been trading today, as you see where I press 1 day. Now 1 week is what the stock has been trading 1 week, 1 month, 3 months, 1 year, and then 5 years. So most importantly, we're going to take a look at the 1 year mark, right? Because on February 20th, it was trading at $34.72. And then holy crap, it took only 1 month for it to go down to $19 because of the coronavirus. But as you see, it has steadily increased each month, which is awesome. And you want to see that in a company, because that means your number of shares and the money that you have in that company is increasing. So if we look at the 5 year mark, which is important, right? We've seen that this company has grown from $13. And that's the companies I like to see. Is when I invest in them, I'm looking at a long-term investment. So I'm looking to stay in them for a couple of years, a year, or longer than that. But again, when it hit that, around February, it really dropped, and it really hurt a lot of people. So you always want to be careful with that. Now, when you see this 1 year mark, it's red, right? What's a good sign of red? Red means bad. So because it's trading at a lower rate now, or a lower per share rate, than it was at its highest point, and that's why that is red. But if we go to here to the 5 year mark, it's green, right? Because at the end of the day, it's still trading higher than what it was at its lowest point within 5 years. So that's about it. I hope I explained it well enough. If I didn't, I always suggest, going onto YouTube and just typing in how to invest and things like that. I'll probably be making more videos to help other people out, because I feel like knowledge that I have can be used for good for anyone who ever wants to invest in the stock market. And it's serious stuff, man, because the stock market, they don't play games. You will lose money like a snap pretty fast if you don't know what you're doing. But I'll go in more depth of what I invest in and what I look for into a company. But that's my gig. Have a great night. Love y'all.